It's Bank of America's Urgent Alert. I'm your host, Steve Metre, and thanks for joining me today. In our show today, Bank of America issues an unbelievable warning to all of its customers. We'll show you what Bank of America is concerned about and what you need to do right now. Plus, we have a sponsor of today's show, Critical Metals Corporation. You can find them on the Nasdaq under symbol CRML, and they are a leading supplier of lithium. They've got Europe's first licensed lithium mine and a strategic partnership with BMW. But here's the big news. The merchant bank that took Critical Metals public, well, they've done 10 mining deals before, all of which have gone up tenfold on their stock price over the next 12 months. You're going to want to put CRML in your portfolio. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now, let's head over to Bank of America where we take a look at what they're concerned about. We'll show you how to trade this because, as we like to do every Sunday, we like to look at the technicals, momentum, and machine positioning of the markets to help you be a better trader. And Bank of America says, look, this shouldn't keep you up at night, but well, maybe it should, because they are super bullish on the S&P 500, and yet the valuation they're saying is ridiculous. In fact, it's statistically expensive on 19 of 20 metrics, is trading at a 95th percentile to trailing earnings ratio based on data going all the way back to 1900. Does this portend a market collapse? Well, you're not going to believe what Bank of America says is actually coming next. Here you can see from their chart on a valuation metric, if you look at this, you can see the shading indicates a metric is statistically expensive relative to history, and that's 19 out of 20. And normally when you see something like that, it tells you to start being concerned about downside risk. But Bank of America, well, they don't see that at all. In fact, they think the risk premium may rise for the Magnificent Seven, but could fall for the other 493, putting actually a situation where they believe that the focus on efficiency and AI rise from the 1980s and 90s shift from labor intensity to labor lightness, a period during which we see a big move in the equity markets. Well, how much more are they saying? Well, the likeliness for the direction is for the S&P to go higher. How much higher? Well, their good case scenario suggests a fair value of 5,500. If you can believe, that would take the market up 7% from here. And there's some backing behind us from Goldman suggesting there is indeed a catalyst. That the problem is these catalysts are now running out of time and very quickly. Here you can see the peak corporate buybacks as their desk estimates at Goldman show 91% of the S&Ps in their open window are at peak right now. And keep in mind, the blackout window doesn't start until March 14th. So we've got a little bit of time from that. Maybe, it's going into that. The issue here is, how does Bank of America believe the market is going to continue to drive like we saw in the 80s and 90s, maybe go up a further 7%, pull back and even go higher? Again, we're going to show you what our screens show and how to trade this, because Goldman goes on to say, well, equity sentiment is stretched. So I want you to be aware here. You have max buybacks going on right now. You have Bank of America saying, look, every metric just about known to man, this market's overvalued. Goldman's saying, look, sentiment is even stretched alongside, and along with that, the machine positioning has gone crazy, and even it's near at max levels, suggesting that everybody that wants to be in this market is. The only question usually what comes next. Well, we already know when everyone's positions on one side, the market goes in the other. But Bank of America's base case is no chance of a recession now. That is necessarily not on the table. But let's take a look at our screens. Here we see the S&P 500 symbol SPY. What do we note? The momentum is positive. The RSI is in overbought territory. It's been bouncing up off that. But as we know that markets can stay overbought for extended periods of time. How about the MACD? The moving average convergence divergence got a positive cross. It was negative last week. Now putting up 31 consecutive daily buy signals on our Momentum Timer Pro. Now, if you're having trouble trading these technical signals because you get in late and then out early and then back in, well, we smooth all of that out with one of our proprietary indicators using Momentum Timer Pro. Check that out. There's a link in the description for a free month with a coupon code. Now, we showed you how to trade this with our indicators back on November 3rd. We had to buy it open. That is up 18.4%. And here's what I want to encourage you: raise your stop loss level up. Maybe Bank of America is right and the market goes higher. That doesn't mean you can't raise your stop loss. And if you have something like your 401k that you can't put stop losses, put it down on paper. If you see a level breach, then go ahead and execute it as if it was a traded stop loss. But another thing we can note here is our machine positioning. We actually give you the lead on where these machines are going that Goldman talks about through our CTA Time and Pro report. You see it down here. We showed you back when the machines were short and moving long and when to get into this market. We do that every day, of course, and we do something unique. We have a historical overlay. In fact, if you're concerned about trading, we put out 12 signals to our subscribers this week alone with full videos backing up how to trade them. Links again in the description below for both reports. And again, coupon codes for a free month. Sign up, start making money trading. We'll show you how. How about we look at, of course, QQQ. We'll look at this and then we'll look at the charts at both of them. Because again, you see the RSI, it's still near overbought territory. The MACD had pulled back, causing some people to trade out of it when they should have stayed in it. We see the positive cross here. Even our own Momentum Time Pro tripped up a little bit, but we said, look, that's on the daily signal. It's not enough to tell you to get out. We still are holding this position because we're using stop loss here, and now we're up 22.99% on this trade going back to October 9th. Could you imagine? You can be bearish on the economy and still make money in the market. We'll show you how. Again, upside target questionable. We don't know. It could go to Bank of America's targets, could go higher. Maybe this is a peak. We don't know that. But again, we tell you across our screens, we have on our Momentum Time Pro, both the S&P and Nasdaq are maxed out across the 1, 3, and 6 month windows. Machine positioning stretched all the way it can be. And notably, here's what we can see on the charts. We note the market has just gone up in a straight line. Last time we saw such a move, there was a correction before it took off again. At some point, we're going to see that, which is again why I keep suggesting use stop losses where you implicitly put it on or you note that. Keep an eye that we want you to hang on to your money when you make it. Most people are not good at doing that. Again, you see both again here, the S&P and the Nasdaq stretch. It's looking like a correction coming at some point. But how about other opportunities? Let's close out some trades we had on the China large cap. Can you imagine this? We had to buy it open using our signals back on January 29th. So you're looking at approximately 1 month of trading. We now got stopped out just the other day on the 28th for a 4.74% gain. That is in 1 month. Could you imagine what that would do to your trading account, to your portfolio, if you could generate signals like that consistently? We do. Again, links in the description below, and I show you how to trade them. So now we're stopped out of this. It does suggest the upside target could go higher if you are still in this trade because momentum remains positive on it. But again, we're out of this. We're going to look for other opportunities. And again, that's the great thing about our subscriptions. We had 12 signals this week. So you get stopped out, you make some money. Guess what? We've got more for you. And you can see it pulled back into the supply zone, suggesting the next move back up to the 100-day moving average, maybe into the supply zone above. If there is another opportunity, we'll just wait for it to show up on our reports. How about the next one? We got stopped out of this one too. Our trade on Hong Kong, we were up the same period of time. It was the same trade, up 0.99%. Could you imagine if you just average 1% a month on your overall portfolio, how incredible that would be to your retirement and your future? We give you, again, all the signals you need to do that. Let's continue because now let's talk about the bond market. Everyone here is saying, look, interest rates can only go higher. The government's issuing a ton of debt, and yet we're seeing a shift here in the bond market in a big way, suggesting financial conditions are tightening, opening up what could be a big opportunity. In fact, such a big one. We noted last week that if we saw our signals flip, we would add a position to our portfolio on it. We did that. We're going to show you why you're still not too late to get on what could be an amazing trade, because here we note Goldman's CTA supply continues, but they've seen some large selling of tuna of 271 billion over the last month and 119 billion over the last week. And guess what happened? It sold and the market absorbed it. That is the critical thing here. The machines came down. We run the historical overlay saying that they have now gone too far, and ours are signaling they need to be moving to the upside and play chase. And sure enough, what do we see from Nomura here? No more selling on theirs, over 110.62 to buy. Friday's close 110.50 on the 10-year, suggesting that they're going to be buyers here in the near term. In fact, we noted our signals flip. We told you last week, look to add when a Momentum Time Pro flips on the daily signal. Our subscribers picked that up. That happened on 228. We added it to our positions. Now remember, we're trading this one without a stop loss. We generally do not encourage that, but we want to show you if you do and you get behind, it's okay. Just use the reports, use the signals, dollar cost average your way back. And what are we only down 0.97% on this trade? That started back in March. Here you can see the RSI is at 53 and starting to pick up steam. MACD's got a positive cross. Technically speaking, this looks very, very good. Upside target's now the 50-day moving average. Downside target is going to be the 100-day. You'll notice that why Goldman says their machines are headed short, why Nomura says they're at max short. We're saying, look, you should be flipping, and they're going to in the near term. That is the advantage of our signals. We give them to you before even the machines know what's going on. How about this? Let's take a look at TLT here on the 6-month chart. And what do we know? All that selling came in over the last month that Goldman knows, and then over the last week. And what happened? It got absorbed by the market and further absorbed, and now it's closed above the 21-day moving average. That's that red line, above the volume profile line. That's where the average of the most of the trades have been over the last 6 months, looking to break higher. A short-term move to the 50-day to try to see if it can breach that. We're targeting here up to 100 spot 57 with a breakout from there. Again, we told our subscribers exactly how to trade this. You have the opportunity to still get in. And if you want to get the signals when they do, well, check out the check out the description below. How about gold? A lot of people super bullish on gold. And what did we see? A big price move. But if you're bullish on the metal, I'm going to show you an even better setup. We've been talking about this on the show now for a couple weeks. Let's take a look at gold real quick, because what we can note here is momentum turned positive. The RSI is at overbought territory, had a big move on Friday. 9 consecutive daily buy signals. But why didn't we jump on this? Because the machine position was already fairly long, and we didn't want to play chase at the high. When there's other opportunities, that's the key. We give you so many trades, there's other places to look, and there was no need. We see even momentum across the 1, 3, and 6 month windows were all positive. This was not something to really take too much time with as far as a trade, because there are other lower risk opportunities. Let's look at gold. Big move up here. How about relative over the last period? You'll see 1 top, 2 top, 3 top, and now a whole bunch more of them right near the all-time highs. Does this have the energy to break out and go, or will the sellers come back with a fury? That is the question. But if you like the metal as a trade, again, we're not talking about the metals you hold in your safe, talking about your trading portfolio here. How about gold miners? Let's take a look at GDX. Momentum is positive. RSI is at 51 and building steam on a technical basis. We see momentum building. MACD's got a positive cross. That's what you want to see. Our Momentum Time Pros now picked up 2 consecutive daily buy signals. We had an initial buy at open on February 2nd using our signals. We've now added a position to that on February 26th. We told you that we would do this. Cost basis 27.41. We're only down 0.29%. Stop loss. Now I'm raising it up a little bit, 26.30. This is key. I'll show you why you want to do that. We told this to our subscribers. Next upside target 28.40. Downside target still 25.62. And why? Because look at our machine positioning. On the slow side, it's still short. The fast machines are moving. They're going to pull everyone up if this happens. That's why we're interested in this. Seeing the opportunity is much better here in GDX than it is for GLD. Here we have 1 bottom, 2 bottom, 3 bottom, and a hold. And next thing you know, the buyers now have worked out the sellers. It appears this is looking to take off to 28.36 was the next target, right at the 50-day moving average, 200 from there, and then potentially up here into $31 price range. That would be a huge setup as it holds support, and that is what's critical here. You notice this level of support has been held repeatedly by the buyers. That is what we're looking at to see a catalyst. So check that trade out. How about another one, palladium? We had this one for you last week. We had to buy it open on 226. RSI is at 49. So lagging behind, GDX here a little bit, but still picking up momentum. MACD's got a positive cross. Momentum time broke. 11 consecutive daily buy signals. The machine positioning has now flipped on the fast algorithm. That is critical. Upside target, 50-day moving average. Let's take a look here at palladium. This, again, setting up a nice trade here running into the 15-day moving average. We'd really like to see it break through that volume profile line at 89.75. The sellers are still there, but notably the buyers are inching in a little higher and picked up some nice volume on Friday. This is a great setup here. Make sure you put your stop losses low enough on this one because it tends to be a little volatile, but potential breakout sends this all the way up into roughly 112, maybe even a little higher. We'll give you the catalyst behind that as well. Let's continue on, because how about our trade on agriculture? We showed you this one live on the show. RSI is at 64. MACD, again, positive cross. Momentum is strong here, and it's across the board. Look at our 1 month, 3 month, and 6 month windows, all strong buy signals on this. We had to buy it open back on December 18th. That trades up nearly 6% now. And what am I doing? Raising the stop loss. That is critical. We see upside target 2301, and virtually right now nothing holding back DBA from reaching that level here. Let's zoom out to the 2-year chart, and what do we see? It's looking right. It's going to get up here to that 2301 level. That is the next target as it looks to break through where these sellers are at. Right now, you see it pull back just above the 21-day moving average, just above the volume profile line over at the last 2 years. And look what happened. Buyers came in here looking to drive this higher. Beautiful setup on DBA. And again, that one we gave to you, and another one we see is coming. And you have to be a subscriber to get this one, because look at soybeans. This is what you want to see from a trade. Max short across machine positioning. Maximum almost technical from sell zones across the 1, 3, and 6 month window. 21 consecutive sell signals on Momentum Time Pro. You don't even need to look at all the other data. What you need to look at is the chart on soybeans and say, wow, when this thing reverses, there's going to be a ton of opportunity. Here you can see 1 bottom, 2 bottom, maybe 3. Does it break down? We don't know. Of course, our subscribers will give you those signals when they trip, but you can be one of them as if you check out the links in the description below. Here, we're setting up potential move when this reverses to go from 24, or it depends if it closes lower. We'll see all the way up. Again, this is a wait on this, but look, when it settles down here, where does it end up? Up here in the 28 range. That'd be a nice $4 move on a $24 price ETF. That would be rather impressive. And what could be the biggest catalyst driving the market right now is indeed a potentially weaker dollar. Let's take a look at the Invesco US Dollar Bullish ETF, symbol UUP. Now, we don't have a position on this one either, but there's 41 consecutive daily buy signals suggesting when this reverses, you may want to check out UDN. How about this? The RSI is at 53 and slowing. MACD's got a negative cross, and the upside target is still 100-day moving average. We're looking as our machine positioning is backing off a little bit on this, but let's take a quick look at UUP here, because I want to talk about our sponsor and the big opportunity with them. Here you can see on UUP, what you're notably here is it kind of rallied up here and stalled out, looking like potentially rolling over. That could be a big catalyst behind, of course, those metals and miners and agricultural commodities. All of those signals, of course, we give you on our show, and not to mention, of course, for our subscribers, 12 signals this month. But let's talk about a big one, something that could put a 10x return in your portfolio, and that is a sponsor for today's show, Critical Metals. You can find them on the Nasdaq under the symbol CRML. Links in the description and pinned comment for everything. You can find everything about them. Let's check them out, because Critical Metals is at the forefront of Europe's green energy transition, specializing in the secure and sustainable supply of critical metals and minerals. Our flagship Wolfsburg lithium product, located in Austria, is set to become Europe's first fully licensed lithium mine, which positions us to be a leading supplier of lithium in the integrated European battery supply chain. This is a huge deal, and one of those things that comes with it is a big strategic partnership, and one of them being BMW. They are a big partner here, and they are striving to become a leader within the EU's mining framework while also meeting the evolving needs of the US. And let's talk about Europe, because they are going to need lithium and a ton of it, and critical metals is well positioned because Europe is going to need a ton of this, as we note that they're going to be going fully zero emission by 2035. This is an aggressive move. There's going to be a huge push for companies like Critical Metal. They're leading the way. And again, they've got the first licensed mine. They've got that partnership with BMW. They've even got a binding agreement in place to build the first regional lithium hydroxide refinery in Saudi Arabia. But let's talk about what the big opportunity here is, because they are set to potentially double their Zone 1 resource with a promising Zone 2 exploration advancing. There's a lot of big things coming along. What we see is their stock price, because they've got a fantastic board and management team with decades and decades of experience driving this company. And one thing we see is going to drive it a whole lot higher is, of course, institutional money. They love companies like Critical Metals. That's the case of why this is an early opportunity for you to get in before you see the stock go up potentially tenfold. Again, the merchant bank that took them public has seen this happen 10 times with 10 companies they took public. How about this? Here we can see the U.S. listed battery materials. When you have a company that goes from TXS listed to the New York Stock Exchange, or in the case of Critical Metals on the Nasdaq on the symbol CRML, what do you know? Their market cap just goes outright bonkers. And here is a case study with Signal Lithium. You can see on the TSXV before they went to the Nasdaq, and then afterwards, man, their stock took off and they raised $100+ million, increased their market cap from $707 million to $2.49 billion. Again, you can find Critical Metals on the Nasdaq under the symbol CRML. But as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.